Hi, this is Lara from Forex Info USA with your free US dollar index Elliott Wave analysis on the 10th of February. I'm doing this video just over 4.5 hours after New York has closed for the 9th of February on Tuesday, so we will analyse price action for Tuesday the 9th and days prior. I provide a subscription service for pure Elliott Wave analysis of the euro dollar and the pound dollar on my site. Check it out, click on the big green subscribe button. My rates are ridiculously, crazily reasonable. If you'd like to check out what my members are saying about the service, click on Elliott Wave for Forex on the top here on my site and have a read of their testimonials. Starting out this analysis of the US dollar index today, I'm going to take you back to 1985 to have a look at the big overall picture. We had a cycle degree 5-wave impulse down, followed by an expanded flat correction, A, B, and we're starting on wave C up, because this is definitely a 3-wave structure. That's how I'm counting it. A, B, C for A, followed by a 3-wave, A, B, C for B, as it must be. Wave C must be a 5-wave impulse up. Because this is an expanded flat, we can expect wave C to reach well significantly beyond the end of wave A, which was about 122. So we will expect, therefore, some very strong dollar rises in the coming next couple of years or so. It's going to take a while. That is a longer term picture. Taking you now just to look at the last 3 years, where this C is analogous with this C here. So looking in a little bit more detail at more recent movement, for the first wave up of this big upward rise we've got, 1, 2, deep correction for 2, wave 2 often is, and we've just started on the very first bit up for a third wave. If you know much about Elliott Wave, you know that third waves will travel the longest in the least amount of time. They have the most momentum. Interpret that as we will expect to see some very strong upwards movements, some strong dollar rises in coming weeks and months. I'm going to take you now to a more close-up analysis of the dollar. I'm just looking now at the last 3 months on a daily chart. This maroon 2 is analogous with that 2 I just showed you on that chart going back 3 years. The recent rises are at minor degree 1, 2, and we're starting on a third wave up. This is a third wave within the first leg of a third wave. So we should be expecting some good, strong upwards movement. This is what I mean. This is a third wave, the first leg of it only, of a third wave. When we have third waves, we should see very strong upwards momentum. And that's exactly what we've got. I'm going to take you now to an hourly chart where this pink 2 is analogous with this pink 2. So now we're just looking at an hourly chart just for the last 5 days for the dollar. And this is our last rise here. We had a 1, 2, an extended 3, come down for a 4, and up for a 5 to end our first leg or wave 1 green. Now the ratios, like I said in my last video, the ratios within this are pretty good. Wave 1 was 0.81 long, wave 3 1.04, and wave 5 0.61 long. So wave 5 and 1 are 0.2 in difference, and wave 3 is just 0.06 short of being 1.618 the length of wave 1. Wave 3 is often related by 1.618 to either 1 or 5 in an Elliott Wave structure. Those ratios in this structure give me confidence to say that these waves with the correction that follows it are all part of the 5 waves up, 3 waves down. That's your basic Elliott Wave structure. So with our 3 waves down, we've got A, B, C. I have a slight problem with this structure at the hourly chart level. A looks very much like a 3-wave structure. If this is a 3 and B must always be a 3, and it certainly is a 3, that's fine. If this is a 3, 3, 5, it's called a flat correction. One of the rules for a flat correction, however, is wave B must retrace at least 90% of wave A, and in this instance, it does not. So for that reason, I'm going to refer you to page 86 of the Elliott Wave Principle by Frost and Prechter, where it says the Dow Jones Industrial Average has followed Elliott's rules impeccably at minor degree, that's my blue, and above, and almost always at lesser degrees as well. We have to make the assumption that the US dollar index follows the same crowd psychology as the DJIA, and I think that's a fair assumption. So from that statement from Frost and Prechter, we can infer that at these degrees, significantly less than minor, 3 and 4 degrees below, we will not always see impeccable rule following. And this seems to certainly fit into that definition. This certainly looks like a flat correction, but it doesn't quite meet the rules. When I'm looking at this wave C, I must admit there does seem a possibility of further downwards movement. This wave C should break down into a 5-wave movement. It seems forced to count 1, 2, 3, 4, 5. We should be counting 1, 2, 3, maybe 4, and maybe down for 5. So I'm going to have to allow for another dollar low, which is probably going to be towards the 0.618 target of this whole rise here, because looking at this corrective structure, I cannot count a clean 5 waves that meet the Elliott Wave rules for a 5th wave. I'll balance that statement, however, with just like this isn't following the rules, this may not perfectly follow the rules, and we may have seen an end to wave 2 green here. It remains to be seen. I'll allow for a little bit further dollar low, but we will inevitably have, probably sooner rather than later, further dollar rises. Now the target in the midterm for the end to wave 3 blue, I'm going to say at about 83.5, which will make it 1.618 the length of wave 1. It could even go as high as 87.76, which would be 2.618 the length of wave 1. Our invalidation point is any movement below here, although at this point, just above 76.5, although at this point I don't expect any movement below here, just under 78.5. I don't expect, now the 3rd wave is well underway, for it to get into wave 1 price territory. When the 3rd wave is over, it should not get into wave 1 price territory as wave 4 down develops. And just a quick reminder of what these bright blue lines are. This is a base channel, the beginning of wave 1, the extreme end of wave 2, create a parallel line, lay it from the end of wave 1. When wave 3 is over, it will turn and come down for a 4th wave. You can use this upper bright blue line as an expectation for resistance for downward movement on that 4th wave, but that's coming up in the future. So in the next day or so, I expect the dollar to have an imminent turn and significant, very strong dollar rises up as we have a 3rd wave of a 3rd wave within the 1st leg of a 3rd wave. We should see some very strong dollar rises coming up. That's all from me today for your US dollar index Elliott Wave analysis. Again, like I said, check out the testimonial, see what the members are saying about the service for the euro dollar and the pound dollar. Thank you very much for watching. I hope this is useful in your trading, and may all your trades be profitable.